Thanks for hopping on. We'll be going into the news release that just came out, and also, obviously a bunch of stuff about it. But let's start things off first. How's your day going? How's the recent golf been?
You know what? Golf was good. I got to say, I lost $10 last night. It got down to, one hole. He birdied the par three. I parred it, and that was the one hole that over 18 I lost $10 on because we played 5, 5, and 5, and he got 10 out of the $15. So golf's a humbling event. It ain't the money. It's the bragging rights that I lost, and he's making me pay for it all morning long.
$10 isn't that much, but yeah, you're right. You have to deal in the group chat of not you being second place, I guess.
Yes. It ain't the money, it's the bragging right that come to play. But a lot of fun. It's a part of the game that I really enjoy. Just the camaraderie, and it ain't the money. It's just the fun of it. And
yeah, you add money just to make it that much more competitive. So exactly. I trust you. I'm all about it. You even throw money on a coin flip just to be competitive for no reason. I definitely get it. I know friends like that too. Well, I mean, let's hop into this. So you guys obviously launch a partnership with Citadel Mortgages. Do you want to kind of walk through, the short form for people that maybe didn't see the press release or even did see it? Do you want to just give a quick kind of recap of what it is?
Sure. Citadel Mortgages is one of the largest mortgage brokerage companies in Ontario. They have around 3,500 clients. They do between 300 to 500 mortgages a year. They specifically catered and they specifically focus on customer service. It's all about giving the client what he needs. And so if the goal is for the client to get a mortgage, they want to make sure they have as many tools in their toolbox to be successful for the client. Because in the mortgage business, unless you can offer a mortgage, you're not making any money. And so with these financially challenged times, and also with not only CMHC, which is the government regulated and insurance backed for mortgages, and also mainstream banking and financial institutions, they are raising the credit score required to get a mortgage. And even some of the constraints they're putting on, you can't borrow money off the equity in your home to buy a second home or to buy a resort property or that. So they're making it more difficult. They're tightening, the financial constraints are getting tighter. So that means one thing: you need to have a squeaky clean and the highest possible credit score that you possibly can get. And that's what Scora helps. And they see that to help their clients to achieve their goal, to provide them with as many solutions to help their clients achieve their goal. And that's how the partnership came to fruition. And we're looking for a lot of good things. And no different than what we did last week with Vin Auto. It's another sector of the market that shows what ScoreUp can do to help people achieve their goals.
Yeah, and maybe before we hop into it, I do have your press release open, but we'll talk about some of the numbers and the differences and the benefits. But let's talk about the mortgage industry just very quickly. We mentioned it even last week. For these people, they want to give mortgages. It's not an issue of, are they going to default or not, this or that. They want people to be able to qualify so that they can lend money. That's how they make their money, right? So you want to maybe talk about kind of the benefits to a mortgage company, just for the fact that, if they use ScoreUp, if they use some of the technology to be able to give out more loans.
Sure. A mortgage company is really an intermediary that between the customer and the finance, the banks or the lending that are getting the money. So They do all of the heavy lifting. They do all of the application. They do all of the evaluate the customer with regards to how much money they make, what's their debt service ratio, what they're looking to buy. And then they go out to the marketplace and they try to find the best mortgage that matches what the customer is looking for. In today's times, most people get pre-approved. No use, and a lot of the realtors and that want that. They don't want the tire kickers to come looking. And the customer wants to know also, what can I afford? Should I be looking at a $500,000 house? Should I be looking at a $400,000 house? Or based on my income and my assets and my debt service ratio, can I look at a $1 million house and what can I afford? So that's what the mortgage broker is there to do. And so what they'll establish for, based on the kind of house you're looking at, where you want to live, the size of your family, all that type of stuff, they're going to say, okay, you're going to qualify for this type of mortgage based on your debt service ratio and based on your credit report. Okay, so now what ScoreUp does is twofold. It will, one, help people that don't qualify for a mortgage get them to qualify for a mortgage by improving their credit score. But two, it will also, if you qualify for a mortgage, what ScoreUp will do will help you achieve a better credit score, which will give you more flexibility to get the better interest rates and the payment flexibility for the mortgage that you qualified for. And we spoke about it last week. There's a big difference when you're applying for a $300,000, $400,000, $500,000 mortgage over a 15 to 25 year amortization, and you can get it at 3% compared to 5% compared to 8%. That's a lot of money out of your pocket and your bank account that you're paying on interest that you could use for your child's education, a trip for the family, or you wanted to do a little bit of remodeling in the house, or those type of things. So it's a big factor. It's a big ticket item for every individual. So ScoreUp really helps minimize the amount of money that you've got to send out to interest, which is not in your pocket, and it's not helping you at all.
Yeah, so two things, like you said, just to recap, it not only helps you save money by raising your credit, but can also, and what we're going to talk about, help you qualify for things that you wouldn't have otherwise qualified for. We want to talk about, so I see here, in your press release, you say the minimum requirement of a credit score went from 600 to 680. How big of a jump is that for the industry? How many more people are we talking about?
Well, I can put it to you the other way. It's how many fewer people are going to be able to apply for a mortgage. That's huge. The difference between 600 and 680 is, you're probably looking at 25, 30% at least of people that have been able to qualify.
Wow.
It's a big number. So it really has taken a lot of people out of the ability to qualify for a mortgage, or it will send a lot of individuals, instead of going to a mainstream banking, they'll have to go to a B lender. So instead of getting a 3 or 4% interest mortgage, you're going to be paying anywhere between 10 to 12 to 18% interest rate for a mortgage.
That's incredible. That's very expensive. So, you say 25, 30%, obviously a huge number. So, in some cases, obviously it sucks for people, but the other side, this has got to be great for MRBL.
You know what? It's very good for MRBL, and more, as we see as finances are tightening and credit is tightening, MRBL and its products that it's offering and its products that it's coming out with is all is feeding our funnel of opportunity. Absolutely.
Yeah, no, for sure. Do you want to chat about maybe, how Citadel, is going to use ScoreUp? So maybe walk people through the process. Are they going to be looking at people who, okay, well, now anyone between 600 and 680 that we would have taken before, but we can't take now, here's the product we have for you.
Well, sure. Now, traditionally, when you go to apply for a mortgage and you want to and you pre-qualify, it's usually good anywhere between 3 to 6 months. Okay, that they'll qualify you for that. You're approved for a mortgage, so it'll give you time to go and find your home. So within that period of time, what Citadel will work is for people that don't qualify, they will then offer the ScoreUp as part of them getting to the qualification stage, so then they can approve them for a mortgage. So it's going to be it'll work on twofold. They will be able to offer them as part of their suite of products in getting them a mortgage, ScoreUp to make sure that they qualify, but also when they get a mortgage, they'll put ScoreUp as part of their package that they offer to the client. So then they can, upon renewal of their mortgage, their credit score will go up because they're using ScoreUp, that they'll be able to refinance their mortgage at a way less mortgage rate, at a cheaper interest rate. So it's a twofold for most mortgage companies, and what Citadel is going to use them for is not only to get them a mortgage, but also as they go forward, they can get and they refinance it or their mortgage, they can get it at a cheaper interest rate.
Yeah, for sure. Maybe just curious, how long do you expect, this increase from 600 to 680 as the requirement? What's your insight on how long do you think that's going to be around for? Do you think that's something that's here to stay for a bit, or is it just here because of COVID and over the next 6 months we'll see it maybe drop back down? What's your insight?
You know what? I don't have a crystal ball. I don't see it, but I foresee. You know what? I foresee it could probably even get worse, get even tighter. I'm going to. I would say we're going to be into this thing for probably 2 to 3 years, more than just 6 months. I think we'll get a rebound, and I'm not, I'm just telling you what I hear and what I read and everything. I think people a lot smarter than me are saying there'll be a bit of a rebound, but I think it's going to be more of a lasting effect. It's kind of like the elastic band. When it goes one way, it'll all of a sudden snap back, and then it'll find some sort of stability. This is not a V-shaped type of recovery. I think it's more of a U-shaped type of recovery, and it'll take a bit of time. And that's what the people that are getting paid a lot more money than me, that are supposed to analyze and identify, what's going to happen in the future. So I think it's going to be here for a lot longer. I'd say 2 to 3 years, and it may even get tighter than what it is today.
Yeah, makes a lot of sense. I mean, I think obviously you might see it tighten. I think that's a good insight. Once this kind of financial aid stops, I mean, they announced that they're extending it to September for most people, but obviously when people can stop affording to pay their mortgage and need to sell their homes, you're probably going to see credit kind of crunch down a little bit. But also, I think it's perfect timing, and I agree with you. It is going to be a U recovery phase. What is the new normal? And for mortgage companies, a lot of them kind of see giving up money as a potential win, right? They're trying to find as many people. We talked about this with cars. At the end of the day, Citadel and other companies, they're looking for more clients. They're looking at ways that they can obviously I guess, have their clients qualify for a mortgage in this case. So it makes a lot of sense that
But
work would be the perfect
but
solution.
Jason, also you got to look at it from the other side.
Yeah.
And I look at it from the glass half full too. This new normal, whatever that's going to be, but as we're seeing it, you'll see a lot more individuals are working from home. So a lot more individuals are going to have more disposable income. They don't have to pay for transit. They don't have to, buy lunch downtown. Take more time out of their day for those type of things. So people that are going to be fortunate enough, and I'm hoping a lot of individuals that continue to work and look at different ways of how they're going to work, they're going to be able to have a more disposable income because they don't have the expenses of what the old normal used to work for, and that. So that will then also help them being able to look at their financial wherewithal and their growth and say, okay, well, you know what? Now I got another $50 that I can put towards my debt. Where's the best place for me to put that $50 to increase my credit score? And that's where ScoreUp can help people. I think ScoreUp should be part of everybody's repertoire, should be your best friend, and your credit report should be something that you take care of, just like you take care of brushing your teeth every morning, taking your vitamins, eating well, exercising. Credit should be right up there.